Trillions of dollars were lost in 2 hours across stocks, metals, and crypto. And the reason why might surprise you. Microsoft alone lost more than $400 billion in valuation, making it the second largest daily loss in history. And the prospects of the US intervening in Iran just got a lot more interesting. Once you hear everything going on, you're going to realize that tomorrow is going to be even crazier.
The stock market had a wild day today, and here's one of the main reasons why. The big three earnings this week did not go as traders had planned. Trillions of dollars were erased today as Microsoft fell 10%, losing more than $400 billion in valuation. This is actually the second largest daily loss by any company in market history, just below Nvidia's recent loss. Whenever we talk about Microsoft losing on earnings here, one of the big reasons why they fell so much is their capital expenditures. Microsoft showed a 66% rise in capital expenditures, while its cloud growth also slowed. Investors are realizing that they're not going to make as much money on the AI theme as they thought they were. And this was a big worry heading into this earnings season, Mike. It was actually so large that we ended up seeing this hit Tesla as well. Tesla's earnings actually fell 17%. Their EPS and revenue missed expectations. Initially last night, the stock rose from this, but Elon ended up posting, and also their CFO talked about their capital expenditures going towards $20 billion in 2026. Now, this is a huge revelation here. It's more than double what their CapEx spending was in 2025. So, of course, they're going to be spending a lot trying to innovate their factories to get them planned for Optimus and other production, of course. But, Mike, whenever these companies are spending this much, it's starting to spook and worry investors. At the end of the day, these companies have a lot going on with AI, right? That's the main thing. Is this going to be beneficial for them down the line? For some of them it will, for some it won't, but it really has huge implications on the stock market. Like we've talked about all week, Microsoft, Tesla, and Meta are three of the top 10 heaviest weighted stocks in the S&P.
And when those stocks fall and spook investors of potentially having lower profits, it matters a lot. That's why when the market opened, when the real money came in, we saw some heavy selling pressure. And then when you also add this information with the fact that we have an upcoming government shutdown, it's not the greatest news. Now, the market did recover a lot as the day went on, but talking more about this upcoming government shutdown, Trump and Democrats are supposedly close to an immigration deal to hopefully avoid a shutdown, but prediction markets are still showing that there's a 57% chance that a shutdown will happen this Saturday, which is just about like max uncertainty, which is not what the market likes.
Definitely not. Whenever you have uncertainty in the stock market, you start to see a lot of volatility, and I think that that's exactly what we've been seeing lately, of course. And today there were some updates where a funding bill actually failed to clear a Senate procedural vote. Again, this was kind of expected, though, and going into tomorrow, keep your eyes on the headlines because we might see maybe Trump post something about a possible deal. Maybe something will be announced. I'm sure that there will be a lot of chatter about this, so make sure to keep it on the radar, as that can affect the market as well. And Mike, of course, Apple reported earnings tonight with SanDisk, and so far, Apple's actually done pretty well. Their EPS is up 18% year over year, revenue's up 16% year over year, both beating estimates, and their iPhone sales are exploding right now. Their iPhone revenue came in at $85.27 billion versus $78.65 billion expected. Their iPhone 17 has had very strong demand so far.
Good to see, and it definitely helps support the overall market. But when we look at SPY, it was a wild, crazy day. So digesting all of this information, what do you take from it, and what are you seeing on the charts?
So something with SPY that we've been looking at a lot lately is that whenever SPY has ran up to new highs, it is rejected back down very quickly. And if we look at this chart here, we actually highlight a lot of these different rejections that have happened in the short term, and also just highlighting the volatile environment that we're in right now. I know a lot of people thought that today's move was crazy, but we've been seeing a lot of moves just like this over the past few weeks and couple of months. So whenever I'm looking at the SPY in the short term, I'm I'm wondering, like, hey, are we going to actually get that good momentum filled move through the all time high? Or are we going to see what we've been seeing over the past couple months and few weeks, where every time we make a new high, again, we don't even run to new highs by that much. And then we see a clear multi-day rejection come in. Today was kind of day 2 of the start of this rejection. And some of these rejections on the way up have lasted multiple weeks.
So looking into tomorrow, what would you say are the key levels on the upside, but also the downside? Because we're in a period where volatility is increasing, and I think we have a lot of uncertainty heading into this weekend, especially with the government shutdown and all of these wild reactions that we saw today.
It was pretty crazy. SPY's low of day was around 685. And again, we had a very wild candle. So that's going to be a big zone to watch for. I've had support also at 686. So that $1 zone will be the main area of support that I watch tomorrow. There are a few supports mixed in, of course, because SPY was so volatile that it was breaking through a lot of the shorter term levels pretty easily. I still like 687.50 as a goods area of support, as well as 691 to 691.50, where we've seen a lot of reaction even intraday today. SPY reacted there a few times and failed to break out until towards the very end of the day. As far as resistance goes, SPY really tried to pop up again this morning. It was moving very well, but really rejected right around 697 to 697.30. So that's going to be the main level I watch for, right where it really failed to break out this morning at open.
Sounds good. And another thing to keep in mind is that Trump said that he's going to announce the Federal Reserve chair pick next week. This, of course, can influence how rates are moving and increase volatility overall, especially considering that the U.S. dollar has lost a lot of its value lately, and we're in an environment where gold and silver are, just crushing it. So considering there's going to be a new Fed chair, this can really spice things up a lot. Right now, it looks like the next Fed chair will be Rick Reeder, but again, the probabilities are pretty equal to Kevin Warsh as well. We'll see what happens next week. Iran also said that they're going to be conducting live fire military drills next week in the Strait of Hormuz. Remember, Trump did move the naval armada in the region. And also don't forget that the Strait of Hormuz carries 20% of global oil trade. So this is kind of a potential big deal. Keep your eyes open for that. And then another thing is that we have PPI data set to release 1 hour before the market opens. These events usually aren't as crazy as let's say inflation reports or anything like that. But if the data does come in outside expectations, it can add volatility. Right now, the consensus estimate is around 0.2%. But what I think realistically is whether you're looking at SPY right now, which is still pretty close to all-time highs, or even something like silver and gold, you have to remain highly adaptable. Because as we saw with, let's say, silver today, just after crossing above $120 an ounce for the first time in history yesterday, today's move got even crazier. It got all the way down to $107 an ounce in just a few hours. So it really goes to show that this market can move quick, and you need to stay highly adaptable right now.
You definitely do, because there's a lot of different headlines that keep coming out and moving different parts of the market and affecting, of course, different sectors. And whenever we talk about silver today, there was something that ended up happening last night at close. So a couple days ago, the CME announced that they were going to be raising or hiking margin requirements again for silver futures. And again, this actually took effect at close yesterday. So that's something that I thought played a big role in the silver move today. Early on today, silver was doing pretty well, but when the market opened, it had that massive, massive sell-off. And if we actually scroll out and look at silver over the past few weeks, it's no stranger to these sell-offs. We had another massive sell-off back on Monday, January 26th as well. So, and the good thing is that it recovered very quickly following that sell-off. So again, silver could end up recovering here, but again, we wanted to cover it because it's one of the more volatile parts of the market, and it had that insane move today. So thanks a lot, CME, for all the volatility coming through once again.
And a lot of times in the past, this has had a negative effect on prices, but clearly silver keeps on marching higher, and gold also had some really good news lately, where it has officially overtaken U.S. Treasuries and central bank FX reserves for the first time in at least 20 years. So, this is clearly a good sign for the bullish trend, especially in a macro sense. And then JP Morgan had some analysts today come out expecting gold to hit $8,000 to $8,500 an ounce. Clearly gold still has some room to hit those targets, considering it recently only hit $5,600 an ounce. But I guess what it goes to show is that there's still a lot of broader bullishness right now. And, whether you're looking at gold, silver, or even the market in a broader sense or a short-term sense, keep riding the trend while it's here. But when it eventually reverses, number one, have a stop loss, but also consider looking at some downside opportunities as well, because just like we've seen in many examples over the past couple of years, when you have large parabolic moves up, a lot of times you see some pretty big moves to the downside as well. And as a trader, you should make money in both directions.
Yeah, there's a lot of scenarios where this has happened, whether you look at some pretty insane runs by Tesla and some of the crazy dips that they've had, or you even look at growth stocks like Zoom, for example, going all the way back to the COVID days where they ripped up to around $600 before collapsing all the way down to $50 or so over the past couple years. There can definitely be some insane movement like that going on in the stock market. But Mike, talking about insane movement, I guess it's time to get into the plays and predictions for tomorrow. With my first one, I'm looking at RCL, or Royal Caribbean, to the upside here. They ended up popping up 18.65% today, and they're getting close to a big resistance in the short term around 356 to 366. I know that's a big $10 zone overhead here, but if they break that, they will be at new all-time highs as well. So I'm really anticipating this for RCL over the next few trading days, and if we are able to continue off of this amazing earnings move tomorrow, I think there could be some great scalping opportunities as that all-time high comes back into focus here.
It had a lot of relative strength today. It popped up by over 18% on a day where a lot of other stocks were struggling. So let's keep it close on watch. Another stock that's on my radar is Carvana, and it's to the downside. They had a really bad day yesterday. They held up decently today, basically after they had some short seller accusations of them overstating their earnings. I'm looking at this one for a potential breakdown play past the $413 area. Like we saw yesterday, it has the ability to move in a highly asymmetric way, and its options move quite a bit as well. So Carvana is on my downside radar, but I would like to see a break below 413.
Yeah, I really like that support there, Mike. I will be keeping it on the radar for tomorrow as well. With my next play, this one might make a lot of the crypto players a bit upset today, but I'm watching Coinbase to the downside. Unfortunately, Bitcoin has been in a pretty big downtrend in the short term. If we go to the daily chart here, Bitcoin actually recently broke under $100,000 per coin and has failed to eclipse that ever since breaking, and most recently rejected there once again. One of the other big revelations with Bitcoin is it's below one of the longer term trend lines that it just recently broke below, and now today we're actually seeing it break below a shorter term trend line as well and confirm to the downside. So I'm going to be watching for that recent low on Bitcoin to come into play closer to 80,000 per coin again. And as Bitcoin falls, I'll be watching for stocks like Coinbase to continue to sell off. Coinbase just broke through $200 today. If we go to the Bookmap, we can actually see that $200 was a massive wall of buyers very early on this morning, and Coinbase didn't really care. It ended up blowing right through there, and now there's actually sellers stacked up around 200 as well. So I'm looking for it to stay below 200 and even maybe break below that double bottom today around 195 as a bit of confirmation for a better scalp play tomorrow and even for the next few days.
Sounds good. Let's keep a close eye on these levels. Crypto has been struggling quite a bit lately. Another stock that's close on watch is DHR, and it's to the downside. This was a recent big money trade for the 215 strike puts for March 6th. Today it had a pretty rough day, and we can see the price action in general has been pretty bad with this one. The stock is getting closer to that 215 strike price. These options expire pretty soon as well, and while this is a little bit more of like a higher risk, higher reward type trade given the strike price, I really like the way the stock's moving, and because the market itself is still a little bit weak in a broader sense, it makes me a little bit more enticed with this setup. This one is on my bearish radar, but like everything, we want to see confirmation of this bearish momentum, and if the stock starts to show signs of reversing, then risk should be managed appropriately.
Yeah, DHR had a pretty big move to the downside today. If it has another move like that tomorrow, it'll easily be back down to 215, almost back in the money. It did seem pretty risky, but it's starting to move in a pretty good way in the intended direction. So I like it, Mike. I'll be keeping it on the radar as well.
All right, well, let's jump right into today's momentum plays then. And with the first one, we have Lockheed Martin, ticker symbol LMT, to the upside.
Lockheed had good earnings, and you can see on the daily chart, they are blasting off again. Now, if they're able to break above intraday resistance around 634.50, watch for a continuation.
With the next one, we have CrowdStrike, ticker symbol CRWD, to the downside.
CrowdStrike had a pretty nasty drop today, closing down over 5%. It was much worse at the low of day. If it breaks under 431, watch for the downside continuation.
And then with the last one, we have First Solar, ticker symbol FSLR, also to the downside.
This stock is extremely volatile. If it breaks under 214 tomorrow, just at its low of day, then watch it down as well.
All right, so we have these three stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. These stocks are volatile, so you need to protect yourself. Have stop losses, only risk an amount that you're comfortable losing, and like always, focus on making smart, disciplined trading decisions. If you need help with that, check out the StockedUp Discord. The link for it will be the first link in the description and comments down below. It's completely free, and you can chat with other traders, share plays, join a nice trading community, and get some free education. But besides that, let's jump right into today's $1.1 million big money trade. And today we're looking at ticker symbol CLS. The trader here bought the 275 strike put options that expire on February 20th of 2026. For our advanced traders out there, this is technically a put debit spread where they also shorted the 230 strike put options. Basically, the trader here is risking $1.15 million to potentially make $3.97 million. This is an asymmetric risk-reward trade. The broader market is relatively weak. And when we look at CLS right now, it had a fair amount of bearish momentum today. I like the asymmetric risk reward and the protection that this trade offers from the market selling off. But of course, the trade does need the stock to fall a fair amount to become in the money and for this trade to be profitable.
One of the biggest things I saw with CLS here is that they are sitting on a massive zone of support around 260 to 270. I know that's about a $10 range. Some people aren't really used to that large of a range, but on a $250 plus stock, it's not overly uncommon. But whenever I look at CLS here, it's straddled this zone a lot. It's really failed to break down. At the same time, though, it's also failed to break to the upside. So it's kind of range bound here between this range. If we do see it start to fall out of the range, it could be a pretty advantageous setup. It's a very short-term play, though, expiring in just under a month. And again, it's the 275 strike. It's a bit risky with it being a bit out of the money. But if we have another downside move like we had today, it'll be to 275 like no problem. So I think it's an interesting play, Mike. It's stuck in this range. It kind of needs to get out of there sooner rather than later, though, and maybe that's what the big money's betting on here.
Yeah, we shall see. Either way, let's keep it close on the radar. And if you are new to the channel, welcome and consider destroying that subscribe button. We post brand new videos just like this one for every single trading day, showcasing multi-million-dollar big money trades, SPY levels and analysis, setups and predictions, hot stocks to keep close on watch, upcoming events, earnings, economic events, historical stats, and so much more. If you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. And let's give a giant shout out to today's member of the day as well, Paper Soldier in the StockedUp Discord, who had some very nice profits today with some GLD call options. He said, do not be like me and sell the dip, but worked out pretty well. Over just under $9,000 in profits. Huge shout out to you. Keep up the great work going forward. Besides that, thank you guys so much for watching, and let's crush it in the market tomorrow.